From the floor of the CME Group, this is Danny Riley on this Wednesday, August 15th. We've got 2 days left in the September roll. The rest of today, tomorrow you can trade the September contracts up until till 3:15, and then I think you can trade the minis until a little bit after 8 o'clock. So you still have an opportunity to get out of those Septs if you're still holding them. Now, what we're seeing today is we're seeing a classic, very, very classical slow day in front of the options expiration. The markets have rallied. Yesterday they sold off, and all the bears came roaring back saying, oh, you know, we didn't take out that flash crash high and all this stuff. You know what? BS. Okay, the markets are still going higher. Now, that's not to say for all you bears out there that the market won't turn back south. Now, what we kind of think at the desk is the fact that everybody's thinking that this is going to happen in September. It may not happen in September. In fact, what we're kind of thinking is we're looking sometime in October toward the end of the month, you know, like Halloween when it gets all spooky. Now, one of the things that Tim Hefty was going to come in here today, but he had to leave early. He's given me a chart to point out. He says that the S&P is actually, it's a classic ascending right triangle, and that it's a very bullish formation. What we're going to try to do is we're going to try to give Andrew a copy of this chart. We'll see if we can get it up somewhere. But as far as the rest of the day is concerned, you know what? It's a no day, okay? We've got a 7.5 handle range in the S&P. There's very few locals in the pit. The volume, when you take this big Sept S&P and the D's contract together, and you take out the spreads, we've got about 4,000 bigs traded. And the same applies for the minis. When you take out all the rolls that were done pre-open, which was about 110,000 ESU, ESZ spreads, and then you look at the volume and you look at all the day trading stuff that's going on, we took out the totals and it's down to about 400,000 minis. That's not very big. What it is that people are confused. Now, what's happened here during the week and what we're a little bit concerned about is that as the market went higher, people were forced to roll higher. They had to roll those options higher, or they had to buy futures to protect those positions. Now, what we're kind of up against here is we're wondering, has the market gone up high enough, and has all that buying power that is generally associated with expiration, has it been used up, and leaving maybe tomorrow and Friday as kind of sell days? We're not sure. So far, the market started out weak today, and then we got down toward the Globex lows and we bounced back up. But really, there's not a lot going on here. Now, I'm going to give you a couple levels that we're looking at. Under the 1110 level, we'll start to hit some sell stops, okay? And then again under the 1106, but the real big sell stops come in 1103 down to 1098. On the upside, in the D's contract, we've got buy stops above 1121, 11 to 1124, and then again above 26 up to 30 even. So we're kind of in the middle there, and there's really not a lot of trade going on. And when I'm looking around on the floor right down here, all these interest rates, they've already rolled all their stuff. So they're back to doing what they do normally. And the markets seem to be quiet down here in the euro-dollar options, and in the 10-year note options, it seems to be quiet too. We're quiet all over the floor, and maybe that's the way people want it. There was an article that was done, there was a poll done by the AP and the CNBC that basically said that 60% of retirees don't want to go back into the stock market, and that after the May 6th flash crash, that really had a big effect on the way people look at the market moving forward. Now, the Pitbull and I have had a lot of discussions lately about the low volumes. Obviously, we pay attention to that. You know, the credit crisis has been a big part of that, but then all this kind of jittery stuff going on in between, you know, the flash crash and all this other stuff hasn't made it a very good place to be. You know, I mean, with everybody sitting on the sidelines waiting to sell the S&Ps for everything to crash, it makes it hard to be an investor in the stock market right now. We're going to try to get a little bit more out about this ascending triangle, but I got one last thing to say. I called this thing right, or we called this thing right, okay? All the bears didn't believe it. We came out, we said we thought they were going higher. The S&P rallied almost 75 handles since we did this, okay? Now, for all you guys out there that are looking at the video clips, we appreciate what you're doing, and I love to go back and forth on the rebuttals. I'm not disagreeing. We do think that there will be a corrective period for the S&Ps before the end of the year, but I'm going to state my case again. We're still looking at 1250 as going into the end of the year. We think that the markets will be a lot higher. That doesn't mean that they can't sell off and then go back up. Now, to put this into the end of it, we just don't see the price action right now. And again, this morning in the S&P, way after the sell-off, the premiums widened out and they went right back into buy programs. Now, one last little thing. I've got to do a shout out to Stephen Eubanks. He's one of our Futures Monster contributors. He's been doing a great job on the IM, putting out levels and helping with the Mr. Top Step website. He's been doing a terrific job. And he's also a trader. He's got a fund that he trades, and he helps us out on the floor. It's just another one of our guys that are helping out doing what we think is really becoming one of the better products around for instant messaging. We'll be back tomorrow with another update.